Most traders think price action is about memorizing candlestick patterns. That misunderstanding is one of the main reasons so many traders feel confused and inconsistent. Price action is not about indicators. Price action is not about chasing signals. Price action is about understanding what the market is actually doing. That's why in this video, I'm going to show you how to read the market itself, how to see what buyers and sellers are doing, so you can stop guessing and start making sense of price movement. This is the same very foundation in everything I teach inside my book, The Ultimate Price Action, where I teach you to understand all 5 different variations that the market will give you, price action the market will give you before either one, it buys or sell. That I can guarantee you, it will always give you one of them. Let's get into it. This video is for the traders at different stages in their journey. It's for the beginners who's new to trading and does not yet know what to look for in the chart. And this is for the traders who knows the basics but still struggle with execution. If you have a hard time knowing when to enter a trade, when to stay out, or even when a move is actually valid, this is for you. If you ever look at a chart and felt confused, overwhelmed, or unsure of what the price is trying to do, you are in the right place. This is for the traders who are ready to stop guessing and start understanding the market. Price action is about learning how to read who is in control of the market, so execution can start making sense and become much clearer. If you are willing to slow down and learn the foundation and build confidence from understanding, this video is for you. See, price action is not just a strategy. Price action is the language of the market. Every candle tells you a story about what buyers and sellers are doing. When you understand price action, you're no longer guessing. You are now interpreting what the market is about to do. You are interpreting information. Price action shows you when buyers are strong. Price action shows you when sellers are strong. And most importantly, price action shows you when control is shifting. This is why price action comes before any setup, any entry, or any strategy. Most traders think price action means memorizing candlesticks. They search for patterns without understanding context. They focus on candles, but ignore the story behind it. Price action without structure is just noise. Price action without location is incomplete. And price action without patience leads to bad execution. This is why many traders feel like they know price action, but still struggle with trades. Let's go over some examples real quick. Price action works because it reflects real decision being made in the market. Every move up or down is caused by sellers or buyers taking action. When you learn how to read who's in control of the market, you stop chasing price and you start waiting for confirmation. This is what turns confusion into clarity. And this is what turns patience to understanding. And this is why price action is the foundation of consistent execution. Now let's look at a clean price action example. Before I talk about any candles, I want to look at what price is doing overall. All right, I want you guys to notice how price is moving with purpose, not randomly. Okay? What I mean by that is notice when market is selling, it's selling with intent. Okay? When the market is buying, it's buying with a purpose. You can see where buyers step in. You can see how price push away from the area with strength. This tells us buyers are in control of the market before any setup appears, right? When the market is buying up, like so, you can see how buyers are in control of the market before any setup appears. Because at this point, right, we do have a clear break. Market is coming back. Sellers are now pushing the market down. Clear bearish engulfing up top, pushing the market. Again, that's the bearish engulfing price action. Market pushing back down. After market did give us this double bottom, divergent. If you have the RSI, this setup right here will be a over, would either be a oversold or divergent double bottom, because the second hit, right, is somewhat a bit lower than the second one, but it's still within the zone itself. But market bought up with intent, right? Breaking previous low high. And now it's coming back to retest it to give us a higher low, right? And this is the area we would wait for a price action. Okay. From that area with strength, this tells us buyers are about to take control. Once we get our bullish engulf in here, right? Once we get a bullish engulf in here, we now know, right? The market is telling us buyers are now have taken control of the market. Before the setup appeared, you would have the price action. Because remember, the setup is not valid until you have an actual price action indicating, telling you that, hey, now buyers or sellers have taken control. This is price action doing its job, showing us control before execution. Okay? Once you enter this trade, you always want to use the last low, right, for your stop loss. Market did go away and then did come back, of course, but we're not worrying about that because that's the most it went. When a stop loss is down here, we target the next structure high. As market does its thing, eventually it went to the point it would have hit on top, TP. Very simple, straight to the point. Let's go take a look at a little bit more examples where confusion may occur, where some traders may get confused, right? Candles looks good on the surface, but when you take a step back, there is no clear control. What I mean by that is, right, we got a clear bullish market. Market's giving you higher highs and higher lows, right? Hit the zone, okay? Market break zone. Let's change the color real quick. Let's do yellow. Market breaks zone, and it started going up to hit the next zone, right? So when it broke this zone, it came back to retest it, and it gave us a bullish engulfing, right, to go to the top side. Let's change that real quick. Give us a bullish engulfing, like so, to go to the top side. But it bought up, and it stopped at this point. And then at this point, it gives us a bearish engulfing to sell back down, right? The price actions are valid, right? The price actions are valid, meaning that it looks good on the surface of it. But again, when you take a step back, there's no clear control because the market is clearly ranging in between the two zones. You get a lot of that when you're not looking at the higher time frame, meaning that you're not using the higher time frame for your setup, right? When you're in a lower time frame, so you're stuck between a ranging market or a consolidation market, right? So buyers and sellers are both active, but neither one are dominating, right? Meaning like buyers take control, it goes up, it stops here. Sellers take control, it goes and it stops here, but it's not going that far, right? It's probably not even giving you 20 to 30 pips at most, or at least it's probably not giving you that. This is where traders force entries. This is where people say the price action doesn't work. The problem is not the price action. The problem is reading without context. What do I mean by that, right? A proper sell would be when you wait for the market to break out of zone like so, right? The break would be market giving you a bearish candle. Let's go with this one. A bearish candle that closed below this zone here. That's a break, right? It continues down, right? And then it goes up, right? It goes up to that same zone to retest that zone. Now you have a break of that zone and a retest of it. The retest is not going to be valid until you actually get your price action. In the case of this, right, you would need a bearish engulfing, all right? You would need a bearish candle to engulf the previous bullish candle. Then you would enter like so and place your stop loss either at the end of the wick or the previous high. You will take that to fall. The context of this market broke structure, retest the structure to continue back down, right? So if market was giving you higher highs and higher low, right? And then at one point, it turns around and broke a previous high low and then come back to retest that same zone area, give you a price action, a PA, right? To go back down. At this point, in that context, right? Market is now, at this point, give you a lower low because this low point is lower than this previous low. And now we have a lower high, even though this is high, but it's lower than the previous higher high. Context matters. Okay. Now, this is the type of price action you want to wait for. The market show you a clear direction first, right? Just like we just went over, right? Market show you a clear direction first, right? It buys up, hit zone, boom, breaks, right? It breaks. Now price pull back, right? Like so. You can clearly see who's in control of the market when price react right here. Once they give you that price action. When price react right there, it's not a guess. It's a response to see who's in control. It's a response to control and structure. This is where execution start making sense and become much clearer, right? It breaks, right? It broke top zone, came back to retest that same zone, and then give us our engulfing price action, right? Boom. At this point, they tell us buyers are now in control. This is how price action remove confusion from trading. This is when execution start making sense and become much clearer. Again, this is how price action remove confusion from trading, okay? Just like before, we saw the break and retest from bottom zone. It broke below. Market retest the same zone, right? Giving us a clear direction of where it's going to go once it gives us the price action, because it's bouncing off the zone. Straight to the point. Okay. Now, price action within the zone, like I mentioned before, are valid, but it will not go as far if it's ranging or bouncing between a top or a bottom zone. Your job is to simply read and react, right? Let the market let the market tells you what it is exactly that it's about to do. Execution does not start with entering a trade. Execution starts with clarity. If you do not know who's in control of the market, you should not be entering. You should not be executing anything. Price action tells us when the market is ready and when the market is not ready. Waiting for that clarity is part of the strategy. We do not enter a trade because we see a nice candle. I don't enter any trade because I see a nice candle. I enter the trade when the price action confirms controls and direction. The market must show intent first, not anticipation, no rush. When control is clear, entry becomes simple, either for a sell with a bearish engulfing or a buy for a bullish engulfing. With that being said, stop loss placement should always be based on structure, not emotion, not hope, not a random number of pips because we have the tendency to risk 10, 20 pips. You need to stop placing your stop loss just simply based on 5, 10 pips. When your stop loss is placed correctly, you feel calm. Okay? Not panic. Proper structure defines invalidation. Okay? Look. We have a break and retest to the upside. Market breaks previous high, just like here. Boom. Okay? You enter with a bullish engulfing. You want to look at the previous structure low for your stop loss. If you enter with this retest, you're looking at the previous structure low for your stop loss. Your stop loss is based off structure, not emotion, not hope, right? You could have a downtrend, right? Lower lows and lower high, market break structure. Here, there goes your retest point. So you look for your bearish engulfing like so. After you enter for your sell, you look at the structure, previous high, to place your stop loss. Not emotion, not hope, not a random number of pips. Structure to complete the setup itself. If control is not clear, do not execute. If price is choppy or uncertain, do not execute. If you feel rush or emotional, do not execute. No trade is a decision. And many times, it is the best decision you can make. Okay? Most traders do not struggle because they're not smart. They struggle because they don't trust what they see. All right? I'm going to repeat that one more time. Okay? Most traders don't struggle because they're not smart. They struggle because they do not trust what they see. They second guess price action when it's right in front of them. Okay? They override clarity with emotion They try to force trades when the market is not ready. Price action required patience before it reward your execution. Overthinking is a sign of uncertainty. When you understand price action, you stop searching for confirmation everywhere. You stop adding more to the chart. You start trusting what price is showing you. From a simple bullish engulfing to a simple bearish engulfing at a major zone that you mark based off the higher time frame. Clarity reduce stress. Simplicity improve discipline. Using the higher time frame, you won't have a lot of zone marked. The setup takes its time to come to you, so you have time to watch it come to you. Easing any stress that you may have had in the past. Confidence does not come from winning one trade. Confidence comes from repeatedly making the same correct decision, either from a double bottom where the market hit a specific bottom zone twice to go to the upside, or a double top where the market hit a previous high more than once to give you a bearish engulfing to fall. Waiting when you should wait. Executing when you should executing, or executing when control is clear, and accepting no trade when conditions are not right. No trade. Okay? Accepting no trade when the conditions are not right. Okay? If it's not a proper setup, either from a break and retest after market breaks a previous low high and then giving you a higher low to go to the upside, or even when market breaks a previous high low, right? Giving you a new lower low at the retest point where the zone is, once market gives you the bearish engulfing to go down, giving you a new low high to go to the downside. If it's not a proper setup, do not execute. So again, executing when control is clear and accepting no trade when conditions are not right. If you want to go in deeper into this way of thinking, the full framework is breaking down step by step in my book, The Ultimate Price Action. All right. This book is designed to help you read the market with clarity and execute with confidence. I'll leave a link at the bottom below if you want to study more effectively and understand this concept of trading more effectively without stressing or fear of FOMO. Okay? In the next video, I'm going to show you how price action works more effectively with more detail, step by step, connecting buyers and sellers and the setups. Make sure you subscribe, like, and comment so you don't miss out on the next video. Trade less, live more. Royalty FX Academy. Peace out. See you in the next video.